Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. We're coming to you live from SmartCon in New York City. Joining me for this segment, we have Christian Pusateri. He is the co-founder and CEO of My Network. We're here to discuss the technology and infrastructure barriers that still need to be solved for encrypted Web3 computation to scale widely. Christian, it is great to have you with us. Welcome to Trade Talks.
Thanks for having me. Hi, Joe.
You got it. So what inspired you to found My Network and focus on FHE as the foundation for Web3?
Well, privacy has been the biggest gap in Web3 for as long as I've been paying attention. So if the battle cry of Web3, which is let's make Web2 Web3 today, which is what it's been for the last 7 or 8 years, then your grocery bills, your SaaS subscriptions, your geolocation information, your trades, the assets you own, all that is happening via a public wallet that folks can tie to you. So I became interested in zero knowledge proofs, which is confidential technology that even JP Morgan's been experimenting with for over a decade at this point. And that led me to the holy grail of cryptography, which is called fully homomorphic encryption. So it gets a little bit complicated. It's based on lattice mathematics, but these seem to be the best methods for enabling privacy in decentralized environments.
Which is interesting because, we discovered different themes covering SmartCon and, other related conferences such as this, and data governance, privacy, security seems to really emerge, particularly at this conference. And they're larger priorities for the space. Why do you think we're seeing that as a topic and a concern?
Well, right now, the rules have been sort of set with the Genius Act over the summer. Hong Kong went forward on market structure. So is Dubai. A lot of big jurisdictions are now laying out the rules to win in this space. So you're starting to see big companies and Fortune 500s enter the space now. And they're not as concerned with things like governance per se, like the early builders were. They're concerned more with security, privacy. Let's make sure that I'm not going to be vampire attacked. Let's make sure that my users aren't going to be doxxed and have all of their information just spread across the open web.
Yeah, I mean, the regulatory requirements as well, which is certainly a motivation. But from your perspective, what technology or infrastructure barriers still need to be solved for encrypted Web3 for today?
Mainly interoperability. So all the tech is there. We've had really bright folks leaving Stanford and leaving Meta and Oracle and Google. There's been a brain drain from those companies into this industry for the last decade. The talent is here. The solutions are there. The problem is that it's all disparate. A lot of it doesn't talk to each other. A lot of the value and the solutions are siloed into blockchains, L1s and L2s. And so now I think you'll see a lot of players like Tempo, Stripe, $500 million to $5 billion valuation. They're not going to need to access all these privacy features or, cool bells and whistles that have been launched with other chains. They can build it all in-house. They raise a ton of money, but they can look at best practices and look at the standards that are emerging, to build it that way. But I think that's what we're going to see a lot more.
And that's kind of the whole point, to remove silos, right? I mean,
exactly.
That's kind of the ethos behind this whole exercise. My Network, you joined Chainlink Labs Build program. How has that collaboration helped to accelerate your infrastructure?
It's helped incredibly. Build is like it's an accelerator. They don't call it that all the time, but it's like that. So they give you a guiding hand. They help you with whatever you need. So Signal, they give you a lot of signal. Sergey's been having conversations with some of the biggest, the leaders in the world, Eric Schmidt, a lot of the banking folks, even before he started Chainlink. So in some ways, we're riding the coattails. We're looking to him for signal, and they bring us into conversations that give our products and the primitives that we build a chance to kind of breathe and stretch their legs. So it's been very helpful.
So when you look ahead, what major shift or milestone do you expect in Web3 infrastructure over the next few years? Or in other words, how would you quantify success as this continues to evolve? And what's My Network's role in that?
Success for us or success broadly for the industry?
Both, actually, like what milestones would you pick or identify?
Well, I think so. The North Star, particularly with decentralized finance, the promise that we're all wanting is that you get your paycheck, you get your distribution, whether you're an owner of a company and you get distributions, or whether you're an employee or a contractor, the 1st, the 15th, the 30th, money hits your account and you're earning yield instantly. And you have access to own a broad range of products, not just public equities, but private equities. And you can own a number of different things across the world that settle instantaneously on Saturday nights, and you can train all the time. That is really what we're trying to do here, is we're trying to give a broader investability to retail, number one. And number two, we want them earning yield and engaging in compounding to help build their own personal net worth. This is a lower middle class, I think, huge fix here. So tokenizing everything, you hear Larry Fink talking about it. This is the trend. I think in a few years, equities will be tokenized. And the question will be, okay, I own Tesla stock, does that mean I have rights, as an owner? I'm sorry, I own Tesla on chain, a
Yeah.
token, right? That's supposed to represent ownership. Do I also have all of the other benefits that an actual asset holder would have, a stockholder of that company, or Berkshire Hathaway, for example? So that's going to be a trick. But over the next 5 years, I think we'll figure that out. And then you won't have Web 2, Web 3 talk anymore. It'll just be, we have on-chain activity. We have on-chain assets. These assets trade, which just is going to be signal for the fact that they're 24/7. They settle instantly. They're permissionless. They're global, and you can buy, kind of whatever you want and earn yield on stable coins all the time. That's going to be the signal in the way.
Basically, like the way we view direct deposit today, it's very ubiquitous in our world. I mean,
Right.
no one ever really hands out physical checks anymore. But this process will be the user experience, the
Correct.
customer experience will virtually be the same. It's just the underlying infrastructure that's going to help to facilitate that.
Yeah, I think so. Yeah, I think the wallet. People don't like having to use a wallet. People don't like having to bridge across chains. We have to abstract that away, but that's getting done. But
I
yeah.
appreciate the insight, Christian. Thanks for joining us on Trade Talks. And thanks for joining me from SmartCon. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.